us. I must ask, I know that they still have time, Greek politicians, to arrive at some consensus regarding the terms, regarding the second bailout, but with every passing day, it seems inevitable that Greece will face a default.
Nice to meet you, MENAKA. The point I was going to raise really is exactly as you said. It's a sorry story, but the conclusion day by day gets closer because, as you say, Greece needs to get the second bailout and then the PSI, because this is just the deal terms. We still need to move to implementation stages, and if they can't get it together, then either on March the 20th we'll have a debt default, or we'll get something before then in terms of the first tranche of the new bailout, and they'll carry on. But it's getting ever closer, and I think there are now serious risks that Greece could end up in a disorderly default.
Distinguish between what you think will be an orderly default and what could potentially be a disorderly default, because this is the distinction that economists, market people across the world have been making, saying if it is an orderly default, we're not that worried about contagion, markets are not going to go into a tailspin, but if it's chaotic or messy, then who knows what the final outcome could be.
Well, when I talk about order, I mean something which has been agreed and the terms come out in terms of discussions move on from where they are now to say, actually, we can't make these terms, what are the options available to us, and then something comes out which is more formalized. When we talk about disorderly, we mean all of a sudden we just wake up the following day and hear that there's been a default, in which case there's an awful lot of legal implications which are above and beyond some of the considerations that are being undertaken now.
But the way things are going, Jeavon, doesn't it seem more likely that it's going to be a disorderly default as opposed to an orderly one? Because they haven't even been able to arrive at terms of agreement with private lenders in the debt swap.
Well, I think the deal with the private lenders is committed on what happens with the second bailout, because the money from the second bailout will help fund some of the issues relating to that deal. I personally think that they're probably very close on the PSI deal. The biggest sticking block is the second bailout. Now, in terms of what you're saying, in terms of does it become more likely? Yes, it does. Is it likely at this stage? I would say the consequences themselves of disorderly default would suggest that the parties will do something to avert that. So I expect Greece politicians potentially to back down, because I agree with you, there is some probably electioneering going on at the moment, with elections only a few months away. But I think ultimately, I think Greece realizes that it has no choice but to sort of deliver on what's required on these reforms.
So what is the final timeline we're looking at, Jeavon, really? Because how long can this brinksmanship continue? There is no brink left, is there?
Yeah, no, I think we're talking hours and possibly just a couple of days. I would say within 48 hours I expect something serious to evolve from decisions. And obviously the comments from Merkel and Sarkozy today have added further pressure. There's a certain level at which the politicians will have to realize that, yes, they want to get as much political capital as they can from standing up against these reforms, but ultimately, the cards are definitely in the hands of the EU and official lenders, because the actual debt default date gets closer every day, as I say, and implementation will take time. So I think ultimately they will do what's required. The question is going to be whatever comes out of these discussions, ultimately, is that sustainable? And I think that is where the bigger question is. Is this just the first of a run of potential restructurings we face for Greece?
Would you like to answer your very own question? Is this just the first?
I think it possibly will be, and I do expect, given how, as you said, how tough these discussions have been, I expect the deal that we have now to be not best for either party, and then what we end up with is possibly further restructuring down the road to bring the debt to a more sustainable level, because I think implementation of some of these reforms is extremely difficult, and I expect targets to be missed in the near future. So
when you say debt to more sustainable levels, you mean an even bigger haircut for the private lenders?
I think the private lenders
the ECB maybe?
Yeah, I think the private lenders have taken a significant hit already. I wouldn't rule out further, but I think it's more likely that the official sector will have to probably take some of the burden.
All right, so what are we looking at by the end of this week at least, Jeavon, if I may put that to you? Are you expecting that by the end of this week we will have some agreement and some progress, or that will be 2 steps closer to a potential default, maybe an organized, systematic default if there can be one?
Yeah, I agree with you. It's hard to sort of plan how systematic it would be, but I would expect for there to be a deal before the end of this week. I think there is a lot of pressure on Greece to deliver on this, and I don't think the firewalls around the potential contagion implications of that around the euro area itself have been fully put up yet, so I don't think they'd want to risk a disorderly default. I think the pressure will remain on Greece to deliver, and I think ultimately they're going to have to back down and take the deal as it comes.
All right, I have one final question to you, Jeavon, and that is, what happens to the euro if we do in fact see a default? The currency, that is. The currency, not the union.
Yeah, if we see a default, then I think it's going to have to sell off. I think it's going to be under a lot of downward pressure because of the uncertainty that we'll have regarding
sell off to what level? Is there any way to gauge sell off to what level?
It's hard to gauge, but I would say sub 120 against the dollar is pretty easy to see it happening. Obviously there's other implications as well, because when we look at the sell-off, it depends what's happening in other economies, and the US, obviously, as we know, is holding off from interest rate hikes, and the data there is obviously stronger. But I would say that the pressure for the euro to fall further below that, we'd have to see capital flight coming out of the euro area, which we haven't seen to the extent that we probably see euro go below 120 as of yet. And the ECB policy measures have also supported that. And I also think if we do get disorderly default, we probably would get further policy reaction from the ECB and EU politicians to try and stem that immediately. But ultimately, I see the euro being significantly weaker than where we are now.
All right, Jeavon, thanks very much for joining us with your perspective. We live another day and watch and wait as the developments take place. That's the picture in Europe, but that's also pretty much the picture on Wall Street. You've got stocks declining, led by financials, mostly on the back of all that nervousness regarding Greece and what happens over the course of this week. Let's take it across to Bertha Kum. She's standing by from the NASDAQ, joining us. Bertha, your US tracking exactly the developments, or the lack of developments, if I may say so, with regards to Greece.
Right. Right, Menaka. It's one of those things that a lot of people have been saying for a couple of weeks. Oh, it's going to get worked out. It's going to get worked out. Now, we're not down a lot. Bob Pisani, my colleague, was pointing out, if you had had this happen about 6 months ago, a year ago, we would probably see a 300-point decline on the Dow. We're far from that. We're down fractionally on the day in terms of percentage losses. Nonetheless, this is one of those things that, Ben Bernanke talked about when he was testifying on Capitol Hill, saying things have turned the corner, but what we've got here is a fragile economy that could be derailed. We saw that last year with the unexpected tragedy in Japan with the earthquake, and then all of the euro debt concerns really causing a pause in the momentum that we had started to see in the economy here. A lot of people feeling like we've just turned the corner, certainly with those very strong numbers that we saw on Friday, but no one is discounting the possibility that a Greek default, orderly or not, would definitely make people take pause and could have an impact here. That said, today, overall, it's kind of a quiet day. Actually, here on Wall Street, they are celebrating the win of the New York Giants in the Super Bowl lately, which has me very sad because my team, the Patriots, was favored to win, but for the second time is beaten by the Giants. And you could also say perhaps they're a little glum up in Boston, where a lot of the fund managers are for big funds like Fidelity. They're no doubt just a little sad on this Monday, so that may be adding to a little bit of the negative sentiment when it comes to fund managers.
Well, my commiserations, Bertha, that your team didn't quite make it. But that said, I do want to come to you.
Thank you.
I do want to come to you with a question on oil. Before I do that, I want to read out some news for our viewers that U.S. President Barack Obama has signed an executive order imposing new, stricter sanctions on Iran and its central bank. The order prevents any Iranian assets deemed to be in U.S. control, including foreign branches of American banks, from being transferred, paid, exported or withdrawn. And connected to Iran, here's the other piece of news. China has said that it will halve its crude oil imports from Iran in March compared to average monthly purchases a year ago. The import cut is a result of dispute over payments and prices between the two countries. Negotiators from both nations, however, are expected to hold talks soon in Beijing to resolve the payments dispute. Both unrelated pieces of news, but related to Iran. And therefore, Bertha, I wanted to bring up the crude question. I know you're at the NASDAQ, but you usually keep an eye on commodities. So what do you make of what we're seeing on crude today?
It's very interesting today, Menaka, because you're getting a sort of a different reaction. Brent is up today, nearly 1%, while WTI NYMEX crude is off today. The NYMEX crude is reacting more to the economic picture. This really doesn't change very much, this allowing of U.S. financial institutions to actually seize Iranian assets, because there really isn't that much of trade going on here in the U.S. It's much more sort of a saber-rattling move. The president yesterday, in fact, in an interview before the Super Bowl, did talk back a little bit, although didn't take off the table any possibility, saying the U.S. is negotiating and talking with Israel. There's concern that Israel might do a preemptive strike in Iran. For the Chinese, this is a very interesting situation. You know, unrelated, this weekend, China and Russia both voted against the sanctions against Syria over the human rights violation and the civil rights issues going on there. For China, this presents a great opportunity for them to squeeze Iran, because if Iran doesn't sell to China and Europe stops buying, they're really in a fix. So it gives China a real opportunity to squeeze Iran for even lower prices here, and would kind of offset some of the problems of Europe not buying from China. Europe having set that deadline as of this summer that they would stop taking imports. So a lot of this is everyone jockeying and positioning. We also saw some headlines where some Iranian officials were talking back the saber-rattling talk that they would block the Strait of Hormuz in retaliation for the European lack of imports, the European blockade, if you will, not bringing in imports, the embargo there. So it's one of those things that's going to bear watching. Right now, I think the market is kind of taking it in stride. It'll be a much bigger issue if we actually do see Israel take some sort of action in Iran. That's a completely different picture altogether.
Absolutely. Geopolitics also in focus. Bertha, thank you so much for that insight on both equities and commodities. That's Bertha Coombs at the NASDAQ. With that, let's take a quick break on Your World at 10. But coming up on the other side, we'll get you all the action in Asian markets and in India. Subsidy woes of upstream companies take a turn for the worse. We'll get you all the details in just a bit.
For us, empowerment is